Today in the crypto space, we see the market getting a bit of a bounce, but still hovering sideways. Bitcoin right around 59,600, give or take. Ethereum right around that $2,600 level. And the rest of the crypto space, the altcoins, a mix of green and red. Finally seeing Phantom show some strength. Aave, Rune, some good gainers, of course. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to do a bit of an analysis on stacks. What's going on with stacks? Is it going to potentially bounce up if Bitcoin does? Guys, let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins. Looking for opportunities, whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. What do we see here? The market cap. The market cap still boring. Nothing's happening here. Where is the capital at? We need some more capital into this market to see it basically lift up this crypto space to higher levels. Without capital, we're going to see a lot of these altcoins continue going sideways. Now, we do see the trading volume. Now, this means the trading volume right now is pretty stagnant. We're not really doing much here. Not a good sign. No real market participation in any of this, which means that, you know, the market is boring. People are capitulating, but potentially looking the other way. But I do feel like we should get a bit of interest in the next little while. People will be coming back from, you know, their summer vacations. People will be coming back to focus on the markets once again. And leading into September, I do feel that that's when we're going to start to see the market start to wake up. We're going to start to see the front running of, you know, a potential wake up into the market. And that could be our opportunity for sure to prepare portfolios, right? So we do see Bitcoin obviously still within a range, a nice little sideways range. Of course, it's been ranging for over 150 days or something like that, right around the $60,000, $65,000 mark. Guys, Bitcoin has been boring, so has been Ethereum. Ethereum, you know, trying to reclaim its previous price action. Still a very healthy thing to see at least Ethereum grind upwards in the last little bit, but nothing major just yet for the heavyweights. And as we do come down, the market is quite boring. We do have some random projects doing okay. Like, for example, Tron. I know Tron today is only up 1%, give or take, but you can see that overall, structurally speaking, is showing a bit of strength in the fact that is that we're broke above the previous high. So we're getting a break of structure in the sense that, you know, we're making those higher highs, which is healthy. And of course, Tron as an indication of the flow of USDT, you know, Tron and USDT go hand in hand. It's a good sign that there's potential, you know, activity building into the crypto space. So I do appreciate that. Another project that we saw a little bit of volume come in was Ton the last little bit, getting a nice higher high as well. But as you keep on going down through the market, you can see that the market is pretty sideways. It's flat. No higher highs, no real lower lows, nothing really major, all within a very tight consolidation. And this is the name of the game here, guys. This is where we start to see a lot of individuals start trading the lower time frames, perhaps, you know, successfully or unsuccessfully. This is where a lot of people, again, get bored and start looking the other way. And instead of focusing, this is where, you know, the magic usually happens, the calm before the storm, right? So this is what I'm really preparing for. And today I wanted to talk a bit about stacks, because stacks is one of those things that you might want to, you know, keep an eye on, or a project that you want to keep an eye on, because in preparation for Bitcoin to potentially hit slightly higher levels, because it could definitely do that, stacks, you can consider it as an opportunity to basically leverage your Bitcoin thesis. And we'll talk about that again, because if Bitcoin does go for another higher high, even to get to about 80, 85, or even to the top to 120, 150, who knows where we go. Stacks is going to be one of those projects that run alongside Bitcoin, and believe it or not, it will outperform Bitcoin. Lower market cap altcoin within the Bitcoin narrative. And we know that Stacks is pegged to that narrative. We'll talk about this in a little bit more detail when we get into the chart. We'll talk about Bitcoin, talk about Stacks, and so on. Let's continue scraping through the top 100 here to get an idea of what the market is generally doing. Now, we do see Litecoin doing pretty good. Litecoin already had its halving a long time ago, a while back. That's a good thing, right? We're seeing that, maybe the supply shock is finally kicking in. We do know that Litecoin is a fork of Bitcoin, so it's a pretty good, interesting thing to see Litecoin wake up like this. I like to see this slow grind to the upside. It is 13.5% to the upside, which is good. What else do we have? We have a lot of altcoins kind of going sideways. Near Protocol, Polygon, Matic, layer 2 on ETH. If we want the ETH narrative to wake up, we got to see the layer 2s wake up. We got to see the ETH ecosystem wake up, including ETH itself, of course. Yesterday's video had a great question. Do we need Ethereum to actually start an altcoin season? And this is one of the things, guys, a lot of us that have been very happy with the Solana move, obviously, and looking at the new layer ones like Sui, people believe that maybe Ethereum is not going to lead this altcoin season. In fact, it's going to be the other altcoins. But there's a bit of an issue here. Well, we have to consider that Ethereum is the only altcoin at the current moment that does have the market cap, the large enough market cap to actually make a difference in the Bitcoin dominance. We generally need to see the entire top 20 perhaps join together, join forces to make up for the market cap of Ethereum, which basically is a very, very difficult thing. So really, if you want an altcoin season, what we really need is to have Ethereum wake up, and it's definitely going to give us a sign of strength for an altcoin season. And if we continue going down, we're not getting major bullish signs out of the altcoins either. Even if we went back up to Solana, Solana has been showing strength for a good while, no doubt, reclaiming previous price action, but it's not near all-time highs, reality speaking. It's still at $145. It's slow grinding to the downside. It's actually down 6% in the last 7 days, whereas Ethereum is up 9.2% in the last 7 days. So what could we say? Yeah, short-term volatility, we can make some inferences. But the reality is that based on market cap, we need those strong heavyweights, including Ethereum, to lead the way for this altcoin season. Despite our beliefs, the FUD or our short-term analysis about Ethereum, we need Ethereum as a market, as an aggregate to show some strength. Kaspa going sideways pretty much, made a slightly higher high, fine, little back test. What else do we got here? Again, Stacks doing its thing within the range, getting a bit of strength, slight bit of strength with those slightly higher highs and higher lows. Not too bad, but if you look at the big picture on Stacks, it's looking pretty good. We have Aave waking up 6.3%. Of course, that's a good thing to see. Some of these projects that are OG within the Ethereum ecosystem, we need those projects to start waking up. Thorchain Rune showing a lot of strength here, guys. It's up 23.6% in 7 days. So guys, I've been building a big position on Thorchain Rune since the last dip, and I'm hoping that we continue seeing strength here in Thorchain Rune. Thorchain Rune right now is at a $1.2 billion market cap. It is not a small micro cap. I get it. However, guys, for it to get to the top 10, it could still do a great 10x move, a minimum around 10x, especially if it's going to be the performer that I believe it's going to be. Thorchain generally, when it starts to move, it does melt faces. So I'm really interested in seeing how Thorchain Rune performs in the next little while. And if we continue going down, we have Phantom finally waking up. That's a good sign of strength. I think Phantom obviously is one of those go-to layer ones that I appreciate. I've been accumulating. Its ecosystem is still very valuable and growing and so on. And in the previous bull run, it showed a lot of strength. Could Phantom continue its trend of showing strength when it matters? That's very, very important. Strength when it matters is important. Like during a bear market, fine. Phantom, coming down to bear market bottoms and so on and so forth. But when it matters in the bull run, is Phantom going to lead the way? Guys, this is what we want to see. Strong projects, strong layer ones, strong fundamentals actually lead the way. Meme coins are great, no doubt, but I believe that ultimately for a sustainable market, we do need sustainability in the fundamentals. And as we continue going down, guys, we're very sideways throughout the market. Very, very sideways. So as you can see, it's very important to keep up with narratives, very important to keep up with fundamentals, because when the sideways price action kicks in, that's really what we can really focus on. That's what we can research. That's what we can learn about. That's what we can get fundamentally bullish on. All right, guys, let's jump right into charts. I know you want to talk about charts, so let's begin our analysis here on Bitcoin. What's going on here with Bitcoin? It's not doing much. In fact, despite this descending broadening wedge, a megaphone pattern, we can start zooming in and realizing the reality is that even in lower time frames, it's not doing much. We're in a little consolidation right here that could be classified as a bull flag. The bulls will be calling it as a bull flag. The bulls might be getting into lower time frames, considering maybe a handle for a cup, which the cup wouldn't be that great. We'll talk about that in a second. And the bears are going to be saying, you know what, maybe it's a lower high. This was the high, this is the lower high. Maybe we come down, break the bottom and come down for lower levels, fall through the volume gap and get to 44. Guys, there's always a bearish and bullish case. However, it's very important to have a plan no matter what happens. So let's talk about this in a little bit more detail. Really, Bitcoin right now has to be the greatest leading indicator for us. We need Bitcoin to start waking up here, right? It's been in a retracement. This is very clear. Impulsive move to the upside, retracing, slow grind to the downside. This is healthy. This is normal. This is nothing to be afraid of. The reality is that in this case, in this structure that we're forming, the descending, broadening megaphone pattern, this should break out bullish, statistically speaking. So we're in a good stance as we speak. But then once you start zooming in and you start looking at what's going on the 4 hour, you start looking at the price action, you can see this is an impulse up, sideways. Again, is this a bull flag? It looks like a bull flag, guys. And if you start looking at what happened, the V recovery, fine, it was a nice fat V recovery. Imagine if this was a rounded bottom. Could this give us the same sentiment as a cup and handle? I would say not, because this is not an accumulation. This is a quick buy up on algorithmic buy orders, and it could induce a lot of FOMO. Buy ups like this, quick buy ups, start to make people feel that it will never come back here because the strength of the buy up. Now, this could be the case. Impulsive move, sideways price action, impulsive move. We get back to the top of the range, which is right around 70 to 73, more or less right into this area. If you look at the previous highs, they all kind of fit right within this area. So why not get back to that zone and start to see what Bitcoin does in the immediate short term? Because again, a big picture back to the daily, this thing should eventually break out bullish. And now, from a bull flag perspective, we have a structure. We could definitely, put stop losses underneath the structure. Back to the 1 hour, you can see you could put basically a stop loss underneath here. Just prepare for any liquidity hunts and all that kind of stuff, because really this double bottom, this W formation that is kind of forming, we want to break of the top 61,600 more or less. We want to break above those wicks, above the 200 EMA on the 4 hour. We break above that, guys, we're moving to the upside. And I'm willing to take my chances on this type of risk to reward, because if you look at what's happening here, if you get into a long position and you start saying, look, if I get in right now, I put a stop loss right into here, right, and I take my profit right around here, being very nice and modest, not even looking for absolute tops, you're looking at a 4-to-1 risk to reward ratio. You're up 14.5%. You're taking a loss of approximately 3%, 3.5%. Totally fine. Risk to reward ratio is great. Now, this is a time where you might say, you know what, I'll get on a bit of leverage. Why? Because you can turn 14% into a much higher return, obviously a much higher loss, by putting a few X factors on it. 2X, 3X, 5X, that's fine. I wouldn't get more than 5X. I think especially if you're learning crypto and learning trading, maybe 5X is good enough. Just understand that Bitcoin has a certain characteristics of being very manipulative. Okay, so just understand that those liquidity hunts, those quick sweeps of the lows, those swing failure patterns happen more often on Bitcoin in my experience. So tread carefully. However, this video is not just about Bitcoin. Okay, this video is also about stacks, because if you like Bitcoin and you think Bitcoin's move is bullish from a bullish thesis, it would be very, very healthy. In fact, it would be smart to also hedge yourself with some stacks, because when Bitcoin moves either up or down, so does stacks. Stacks is almost like a leverage position on Bitcoin without taking leverage. So if you're interested in trading, guys, take a look at the links in the description. I do have a link to Blowfin, which is an up-and-coming exchange that obviously doesn't require KYC. And the reason why I say obvious is because I do not use KYC exchange exchanges. KYC is not an option for me, so I look for new and up-and-coming exchanges, and I try to test them out nice and early. So if you're interested in Blowfin, if you're looking for a new exchange, feel free to go check out that link in the description. There is definitely bonuses for new signups and all that good stuff, so go check it out. But back to this, the reality is that getting into a Bitcoin position is not bad, but what about a Stacks position? Let's take a look at Stacks and see what's going on there. Because if you look at what Stacks is doing and compared to what Bitcoin did, Bitcoin got a bit of relief in the last little bit. It's up approximately 1.3%, whereas Stacks right now is up 3.25%, which means you can see there's already a bit of an X factor already plugged in. And if you look at the actual price action, isn't it fairly simple? We got a nice bounce to the upside via recovery, very similar to Bitcoin, and then we're getting into that sideways consolidation very similar to Bitcoin. So it's not only is it simple, but it's almost exact. The only difference is that we do see a slight bias to the upside here on Stacks. We're making higher highs and higher lows, a little bit more aggressive from a bullish perspective here on Stacks, but this is definitely very valid. You know, very nice, basically some good price action to put a bit of confluence on. We definitely got a swing failure pattern. We came down to break below. We got through the volume gaps. We got to horizontal levels once again. We came right back up, bounced, and now we're going up for that higher high. The next level of resistance, of course, here on the 4 hour is the 200 EMA. Obviously, it's getting a reaction there. Do we have enough strength to break above it? Now look at the previous fractals and see how price action deals with the 200 daily EMA. It doesn't necessarily mean that we're going to break above it in one go. You know, we could hit it, which we did already, come back down, pick up some more bullish bids, come back up, hesitate, and then finally break above. Usually the 200 daily, the 200 EMAs on any time frame is usually a level of resistance. Okay, we got to really understand what's happening here. Is that we're hitting a zone that we need to break above. And the last time we broke above, in fact, we didn't stay above it very long. We went above and then we broke down and made a lower low. And now if we start zooming out here on Stacks, which is super valid, guys. Zoom out, especially nowadays. You know, we're talking about bottoms, levels of reversals, big level reversals for bull run reversals. You can see that technically we're hitting some critical levels. This level right here where we had the last buy up, the last major, let's call it emotional level, is currently being tested. And currently, you know, a lot of these individuals got liquidated, you know, because we fell below a good accumulation range. Now, all of a sudden, if you look left, we started looking at this liquidation zone. A lot of emotional people that bought the top, a lot of the emotional people that basically, you know, unfortunately became exit liquidity. And then some people that bought the bottoms here. Guys, this is where I started loading up on Stacks. As you know, I wait for dips. I only buy dips. And then all of a sudden, Stacks starts running. And I'm not interested anymore. Once we start leaving the stations, we start looking for bearish divergence, and that's when you start taking profits right around the zone. Now that we've dipped back pretty much almost to these levels, previous high, previous lows, liquidation points, volume starts to increase, market participation. Now we start to ask ourselves, how many of these individuals are going to capitulate? How many of these individuals that were once buyers are going to turn into sellers? And how many of these individuals are going to give me their assets on the cheap? And that's what we really want to question and prepare for. Now, we did dip for a lower low. We did come up for a higher low. A lower high, lower lows, lower highs. Guys, we clear trend to the downside. Very clear trend. No sign of change of character here on this price action. Let's take a look at the momentum. Let's take a look at some other of these oscillators. Look, we're making lower lows on the price action, lower lows on the momentum. Nothing suggesting bullish divergence on the daily. This is the name of the game here, guys. Now, if you look at the trend oscillators looking bullish, right? It's looking bullish because we got an EMA cross with a green histogram bar to the upside. And the last time we did that, and you can see that we're slowly trending to the upside. What I want to get a trend line in here so you can kind of see this a little easier. You can see little by little we're moving to the upside, which is really, really healthy, which is good. You can see that each time the EMAs come down, it's higher lows and higher highs. Great stuff. And the more we do that, the higher we get, the more we get into the bullish control zone, and the more the impulses to the upside with regards to trend become stronger and stronger. As you can see, upside impulses are getting stronger and stronger. So what about the next one? Is it going to be a strong one? Are we going to see stacks actually move very strong? And imagine seeing Bitcoin starting to break out of its current structure. This is why I use Bitcoin as a leading indicator, because if you think about the first segment of the video where I talked about Bitcoin is potentially in a bull flag. If it breaks that bull flag, what do you think is going to happen to stacks? Stacks is going to start running. Stacks is going to start looking for higher highs. Stacks is going to start reclaiming previous price action for sure. And then all of a sudden, that position that you thought wasn't a good one, basically as it's bleeding out here, starts to become a really good one. But again, entries, what about that? Where do we start scaling in? Guys, just be careful, because what we do see is a continuation of lower lows and lower highs. The trend is still intact. The trend is your friend until the end. And until we get some indications of that trend ending, we got to be careful. The only signal that we have at the current moment is the trend oscillator, showing us the Class A bullish divergence from here. From this level right around here, you can see this expansion is weaker than that expansion, which means this move to the downside is weaker than the previous, and we're making lower lows. How does that make sense? We actually made a lower low while this expansion to the downside is weaker. That's divergence. That is a divergent state. So what we really want to see here is eventually the price structure to kick in here so that we can get some confidence. And that usually takes a bit of time. Let me show you what I mean here, because price action is king. Although the oscillators are giving us a decent amount of confluence, especially with the trend, the momentum, everything's oversold. I get it. That's good enough. But divergence would be awesome. Bullish divergence would be awesome, but we're getting in the trend oscillator. Now, if we can come up and come down and make a double bottom, that would be good. Okay, that's good, or even a higher low, that would be awesome, because then we start to look at this as a shoulder, head, shoulder. That would be really, really good. What about if we get enough strength and we break above and make a higher high above this high? Awesome. Come down and back test. We don't know if we're going to hold the previous high as support. Whatever. We look for the oscillators to see oversold conditions. We get in on the confirmation. This is another time to get in. This is a time to deploy. This is a time to deploy. You deploy on all the little confirmations, so your average entry maybe is right around here. Forget about trying to catch the bottoms. Forget about that. Right now, we're looking for long-term spot positions for the bull run. Like I said, if Bitcoin starts to rally and if Stack starts to get to its previous price action, and we can get our entries right around here by DCAing as we build the structure of a reversal structure, inverse head and shoulders, cup and handles, Adam and Eve patterns, and more importantly, getting signs of weakness from the bears, the divergence. Guys, that's the time to start building that position. Now, just to do a quick measurement and just to kind of solidify what I'm saying, if we end up by getting a position on average right around here, let's say at $1.70, forget the bottoms, average position right here, and we get back to just previous price action. Let's be modest. Forget all-time highs and price discovery. Right here, that's already 100%. You're up 120% just getting back to the previous high. That's the time to take half on the double. You have a decision-making time to do. Do you take your initial investment off the table? Do you let it rally? Do you trail up stop losses? How do you defend your gains and your initial investment? That's a different conversation. At this current moment, it's time to get a bit offensive on Stacks and some other altcoins, because they're definitely hitting the bottom of the range and little by little showing their their horizontal support levels. Now, from a bearish perspective, I know this video is sounding very bullish from a Stacks context, but what we really have to understand is that the market is still trending to the downside. So I'm just preparing you guys for the possibility that we get the reversal here. If we do not, guys, let's say we consolidate here and then we go for another impulsive move down after a bear flag right into here. It could happen, a big picture bear flag. The next target is all the way down here. That's the reality. Yes, we have a node of volume here. We already tested it once. We got a wick. We got a reaction. There's a node right here of emotional individuals. I get it. But the reality is the majority of the liquidity begins right around that level. And then we start hunting liquidity at this level. We start hunting positions and starting getting people wrecked. Entries such as mine right around here. Average position right around here at about 50 cents. Do we come down to that level and start hunting liquidity? Very, very possible, guys. So prepare. And this is why I'm saying wait for the structure so you know where to put your invalidation. position. You could put a stop loss underneath the structure. At this current moment, we're still making lower lows and lower highs. So slowly DCA and build your position as you get the confirmations and as you get the reversal pivot point structures that we're looking for. Guys, if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. I'm going to be live tonight at 8 p.m. EST. Have a good one, and don't forget, buy the dip.